You need to get people's appetites wet, and then you get a little pullback, and then everybody that missed the first rally, they start freaking out. They're going, well, I'm sure as shit not missing this one.
Yeah.
And that's what causes something really stupid, and then it kind of unravels. That's my mental framework for how the next few weeks are going to play out.
This episode is brought to you by Kraken OTC. Get access to 24/7 trading services for high net worth individuals and institutional clients to execute orders over $50,000. You'll hear more about them later in the show. As always, investments in blockchain technology involve risk, terms, and conditions apply.
All right, we're live.
Guys, we're back with another 1000X podcast. It's been a bit of a slow week. We're kind of trading sideways, Jonah. We went up, we went down.
But we've been getting engagement on Twitter by rage baiting people. That happened.
Yeah, that was, what's funny is it wasn't even intended to be rage bait. Although I knew I would get some rage bait for the tweets. I get some anger, and just if you're interested in markets talk, we're probably going to spend the first 5 minutes talking about the tweets that Jonah and I put out that lit a fire about Jews. It tends to bother people for some reason. Both Jonah and I are Jewish. We both apologize for that, and over the weekend. We both just noticed a massive uptick, I think, in not just Jew hatred, but like general hatred on Twitter. I think Twitter has become a very angry place. There seem to be a lot of angry people on there. And so Ryan Selkis is actually what started this. And I will divulge on this podcast an interesting story about Ryan Selkis that's not defamatory, just as true. He kind of lost his mind about, I think it was a year ago. We both went to the Trump NFT dinner. And this is before he was posting crazy conservative stuff online. I mean, he had just started to do a little bit of it. And then this kind of like sent him over the edge. I was actually sitting with him at the table when Donald Trump called him up, and he looked at me with huge eyes and he goes, what's going, like what? He had no idea he was about to be called up. So he gets called up, and Trump says, Ryan's been instrumental. Why don't you say a few words? And he says, basically, thank you, Trump. I want you to be president. It wasn't anything special. He comes back down, and he like looks at me and he goes, I think I was put on this planet for a mission. And I was like, okay, that was really cool. You just got called up with the president. And he like looked at me with the craziest motherfucking eyes I've ever seen in my entire life. And it's like, Avi, no, you don't understand. Like, I was put on this planet for a mission. That's when I knew he was like a little bit off of his rocker. And then he started, I guess, over the last like few weeks tweeting about how the Jews are declaring war on America. And so Jonah called him out on a tweet, calling him Skinhead Elmo, which is great branding. And then I basically retweeted that and added a little bit of my own flavor, kind of explaining like the people that hate Jews, and I think also generally spread hatred around to other races and people and sects. What they do is they apply different standards to everybody. They'll apply a standard to Jews or to blacks or to Asians that they don't apply to their own, and then they sort of hone in on it and only see that. I mean, like a great example of this is there's that infographic that gets sent around about like all of the Jews that work at CBS and like work in the media. And there's like an infographic of like 50 Jews. And then when you actually like look at the employment numbers of like how many executives exist at media companies, the number is like 7,000. It's like these companies are huge. Like, of course they're going to be Jews working at these companies, Anyway, I kind of lit the internet on fire. And Joan and I are not political commentators. We can get political every now and then, but politics, I think, has been shoved into basically anyone that's on Twitter, politics has been shoved into your face over the last 2 years, 3 years since Elon Musk bought the platform. And Elon's done some great things from the platform. I think this is one of the bad things is politics is bled everywhere on it. And I just would hope that, we're kind of here so that you can escape the rat race and not like get rage baited by what perceived groups of people may or may not be doing and getting like really angry and worked up about it. Escape the rat race, make some money. Nobody's holding you back. There's no secret cabal of people that is plotting against you or us or anybody. Everybody's just doing their own thing and trying to make their way in this world, and just no reason to spread hatred, I guess.
Yeah, I appreciate that message. Thank you for suggesting we talk about it, because for me, there's, when you look on Twitter, fantastic source of trading information, fantastic source of just general knowledge. If you want to learn about something or you want to catch breaking news, it's kind of the place, especially for some of the more market impacting news that takes much longer to filter through to mainstream media outlets. So we're all there, we're all watching it. We're all trying to escape our wealth trajectory by staying plugged in through Twitter. And of course, there's going to be a portion of Twitter that just tickles that funny bone in your body that makes you upset or enraged or outraged or whatever. But I think for me, what happened was it permeated through to the crypto trading part, right? Like before it was compartmentalized. There was the crypto news, and then there was the global news, and then there was the stuff that kind of pisses me off. Then watching a formerly very respected member of our crypto and analysis and trading community just completely like become a raging like Ku Klux Klan level anti-Semite and blame the Jews for America's ills. I'm a Jew. My kids pledge allegiance to the flag every morning in school. I love this country. I work hard to make it better. I pay my taxes. Like, I don't appreciate that. So it beyond just me complaining about this one guy going crazy, I think is a broader theme, which is, we are now in the era of AI and Twitter subject to, kind of loss of, basically it's easier to lose your bearings, right? So if the Rothschilds were a prominent Jewish banking family 100 or 200 years ago or whatever it was, that does not mean that, quote, the Jews run the banks, right? Avi and I fall within the broader set of Jews. We don't run anything other than this podcast. So, it's pretty annoying to hear that stuff. And if it were just annoying, it would be fine. But it's like kind of a mind virus that's, now that it's infected people that I used to listen to, I'm kind of just would like to say my piece and say, please stop. Like we're good people. Don't stereotype us and make us into some sort of like loathed minority. Anyway, zooming back out, this is the kind of thing that probably wouldn't have happened if markets weren't slow. If we
that's fair. If markets were ripping, I don't think anybody would be talking about this. I mean, to be completely honest, we're coming up on week, what is this? This is week 6 of Sideways. Starting on Monday, July 14th, all the way. Well, yeah, I guess
Thursday, 10th of July was the wick that brought us to these levels. If you look at something that's really been going like Hyperliquid, the first wick up to current levels was back in June.
No, 37 days. It's been 37 days of Sideways. And I think people are starting to lose on Bitcoin. Now, while Bitcoin's gone sideways, obviously ETH has gone trending up in a straight line. And that's been very exciting for people. Some good ETH beta traits out there. I mean, you called out Arrow. That was good. Aave did well for a hot second there, and then retraced. Link has done extremely well, and was pointed out earlier as ETH beta.
We should talk about that at some point.
Like the Link chart does look very good. And to be honest, it kind of fits into the thesis of the quote unquote institutional rally, just because a lot of people know about it and it's been around for so long that people on Wall Street, they kind of like they know it exists, and it in theory fulfills, not just in theory, in actuality, fulfills a very important part of the crypto ecosystem, providing Oracle data. So it has a real job. It's well known, and it is I think part of that ETH beta bucket.
But
The
it's not just
question
a
is,
dinosaur coin that's going to rally because institutions are familiar with certain dinosaur coins. I did a little digging on Link, and if you go on DeFi Llama and look up their actual revenues, it's pathetic. It's like something, it's like 5-figure revenues. But apparently, most of their Oracle revenues, which is their big business, it's an Oracle, are off chain. So supposedly, there are big companies off chain paying them off chain dollars that we can't track for their Oracle services. And I don't, maybe this is something for the community to help us answer. If you guys want to join our Telegram room where we talk about such things, maybe somebody can help figure out how to track that. Because unlike publicly traded equities or privately traded companies where there is some telemetry into what's going on, here it's like they say they're doing a lot of revenue providing Oracle services, but you have no idea and you have no way of knowing. They don't do token buybacks to the best of my knowledge. So you can't like track buy and burn. It's ultimately just this like nebulous, business with quotation marks around the word business, doing potentially large, potentially like very small revenues. We don't know. And so to me, it's not quite yet an investable thesis for the long haul, but I'd certainly buy it for a trade just because it's one of the things that seems to be performing in a momentum market. So if we start rallying again, maybe Link should be on the list of things you hold for like a week or two along the, or a month or two, up there with some of the other momentum names we've been talking about.
Yeah, and I think that's an important thing to point out is that you do have to. This is the period of time that I've talked about before in the past. This is your alt season. This is what it's going to look like moving forward. And what I've said over and over is that it doesn't last that long. In my personal opinion, we probably have 3 to 4 more weeks of this before you get some sort of implosion in the alt market. If it's not, already underway, which I don't think this is. I think this is a pullback, and we'll get into that later. But I do think that like you have to be nimble here. If you're trading around the links, the ETH betas of the world, you have to be taking profit on 15 to, like take profit at, take a third profit at 15%, a third profit at 30, and a third profit at 50% move. So something like that. You can structure the trade as you want, but basically, if you're buying any altcoins in this particular environment, you should be taking profits aggressively. Because this is like the environment where you get these completely inefficient pops from people that are kind of doing what you're doing, which is playing the rotation, but just getting in at worse time than hopefully you did. Hopefully you're buying on days like today and not buying on days when they're up 15, 20%. Right? That's sort of the goal, right? Everybody wants to buy it when it's going up. Nobody wants to buy it when it's going down. And that's because that's how crypto works. But that's kind of, and look, that's kind of what's happening in ETH now. Like you're seeing a lot of people call for it to be over. Meanwhile, ETH is, it basically touched all-time highs and then retraced 10% and into a reasonable support level with treasury companies still buying. So like I'm not particularly worried about this pullback. I think that we probably get another leg up, at which point I'd be a net seller of crypto on the next leg up, because I do think that it gets this was the tasting pump for alt season. The
Michelin star tasting pump. Yeah, exactly.
It's like the way that I always think about it is that you need to get people's appetites wet, and then you get a little pullback, and then everybody that missed the first rally, they start freaking out. They're going, well, I'm sure as shit not missing this one.
Yeah.
And that's what causes something really stupid. And then it kind of unravels. That's my mental framework for how the next few weeks are going to play out.
Handling large digital asset trades requires precision. Kraken OTC gives high net worth individuals and institutions access to deep liquidity and competitive execution for crypto orders over $50,000 with minimal market impact and around the clock support. Trade via chat or RFQ at kraken.com/blockworks. Shout out to today's sponsor, Katana. Katana is a DeFi-first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
I like that framework. A couple of things. So I normally hate buying sell-offs in crypto because I've been burned so many times trying to catch a falling knife, and then crypto just goes so much lower. But we are still, if you zoom out, we're in a white hot bull market here, even if it's stabilized a bit, especially for certain tokens. So oscillation around that upward trend is probably okay to trade around, meaning on a day like today, for a token that I'm kind of long, but I still feel like nakedly underexposed to, in my case, it's Aerodrome. I have some, but I don't have enough. This is probably a good day to buy. It's not really catching a falling knife. It's more like just getting in, playing for a reversion to an upward sloping mean, right? And so I kind of like that. I hadn't thought about it. Then you bring up, so two more comments on what you just said. Another point you made is about how you want to sell or reduce exposure to crypto during the next turbo pump. And I kind of agree, but the way that I would reduce exposure would be, I would probably just get rid of all the leverage that I have on and consolidate altcoins back into Bitcoin, because I still think Bitcoin's got some room to run. I wouldn't consolidate into dollars unless I was planning to buy it back lower, which is more active than I like to be, just being me in a high tax jurisdiction. And then the final point that I wanted to talk through with you, I've been basically this cycle, for the last year, I've been playing with a strategy that's kind of risky that I haven't really talked about, but it's actually, I'm going to try and justify why it's less risky than other ways of trading. And I want to get your take, Avi. So, okay. So putting fresh capital into crypto is, for me, crypto's kind of a roach motel for money. Like I don't really pull money out of crypto. I did once when I sold a bunch of Bitcoins for $300 a token back in 2013, and I'm burned from that. So I haven't really withdrawn crypto into fiat in a major way, other than, occasional profit taking, but more often than not, I'm putting money in, right? So on these fresh all-time highs, I don't like to put fresh capital into crypto, but there's so many things I want to buy that are higher beta tokens. And I don't like rotating either, because then I have to realize cap gains on Bitcoin. So one thing I've been doing, Avi, is, and I did this with a couple of tokens that we've talked about on the podcast, and most recently I did it with ETH and Aerodrome. Instead of pumping fresh capital into my portfolio or wiring money in, I've just bought with margin. I've just used my existing tokens and margin bought ETH, margin bought Aerodrome, margin bought Aave, a couple of other things.
Isn't it the same fucking thing as putting in fresh capital?
Not really, because closing a levered position is as easy as clicking X on the user interface of one of these exchanges. I've done that before, and you're never going to lose more than you already have on that particular venue, right? So what you're risking isn't fresh capital that you've put in from other sources. You're just
it's the same, but it's the same risk profile. So to me it's the same. It's the exact same thing.
Not exactly though. It's really nuanced. It's not that complicated, but let's say that I have $1 million worth of crypto on Kraken. Mm-hmm. And I buy some more on margin. the most I can lose is $1 million, right? I'm not going to go into debt versus Kraken. Whereas if I go and buy $200,000 worth of additional tokens with fiat that I wired to Kraken, then the most I can lose is $1.2 million. So it's a downside limiting exercise. Would you disagree?
Yeah, I would disagree with that. I mean, basically, I think you're right in an absolute sense, but I think you're wrong just from like a risk perspective. Is that when you use margin, you're increasing your risk profile, and so it's actually likelier that you'll lose money in that scenario than putting in fresh capital, because you do have like a liquidation price, right?
Yeah, of course.
And so
basically what I'm doing is I agree with you that I'm taking more risk than I would if I were pumping in fresh capital, because I can get liquidated. But for very short-term trades that I'm monitoring closely, I'm comfortable taking that risk. And I have a lower downside scenario.
The only reason to do that is just like friction of moving capital around. Like
you kind of hit on it too. That's the real reason.
Like I wouldn't necessarily say that I think it's the exact same thing. Like from my perspective, you're making the same financial decision. If you're buying $250,000 of an asset in any way, whether it's cash or you get a loan or you mortgage your house to get that $250,000, at the end of the day, you're still putting an additional $250,000 of value at risk in this asset.
Yeah, of course.
It's like the same. To me, it's the same thing. It's like the only thing is like from a friction perspective, for sure.
Less friction, less.
And so like I wouldn't say it's safer either. Like it's definitely not, like safer is not the word that I would use.
Okay, so maybe let me call it psychologically easier for me to manage. One, because of the friction. Two, because I feel very happy to close a levered position, but somehow I'm just really terrible at pulling fiat off of exchanges and wiring it into my bank account, putting it back into something low risk like T-bills or the stock market. I just don't have a good track record of doing that. Maybe I should just stop effing around this alt season with these tokens on margin and just put more cash into this to play it and feel comfortable sitting on cash on a crypto exchange. But I have this problem where once I put cash on a crypto venue, it very quickly turns into crypto.
It just kind of stays there, and it's kind of like you get addicted to the trading of it, so it's very hard to pull it out.
I know I sound stupid, but like I'm just looking for ways to around this problem that you from
a psychological standpoint. I do understand what you mean, because I also like I do that, right? Like if I have money in crypto, it's very rare that money in crypto comes out of crypto. And so if I want to, I mean, I just recently did this, for example. Like I put ETH on Aave and I borrowed against it and paid exorbitant rate, but that's fine because it was a short-term.
Is it still exorbitant? I thought it was like 3% for an over collateralized loan.
It's more expensive than punting on perps. It's just I don't have access to perps.
Yeah. You can get margin in the US. You don't have to trade perps.
Yeah. But it's like well, I probably should have just borrowed ETH, I guess.
Yeah. I mean, basically, I find that it's very easy for me to click the X button and market order myself out of levered alt trades before I get into trouble, or just to take profit and do whatever, just roll that money back into Bitcoin. But for some reason, psychologically, I lack the discipline to hold USDT on a crypto exchange and not have it somehow turn into crypto after one of these conversations, or to wire money off.
Sorry, I'm just having a moment where I realize like I might be retarded because I borrowed USDC. Why didn't I just borrow ETH?
ETH is definitely cheaper to borrow.
Yeah, I'm aware.
Anyway,
just naturally defaulted.
We just lost Avi for the next 10 minutes. I'm going to be talking to him, and he's going to be like 3-second response time, like yeah, as he goes and DeFi's his way out of this.
Yeah, like that was fucking stupid of me. Anyway, moving on.
We own our L's on this podcast. We own our L's. we're not
I'll never lie to you. You just get the unfiltered truth, even in the moment where I'd open my eyes and realize, like, why did I do that? It's
yeah, me, where I'm like, it's less risky to use leverage because I'm stupid. Yeah, I mean, look, we're just normal people and screwing up in public to try and solicit information and learn as we go here. All right, what do we talk about now? Do we talk about these treasury companies driving ETH and how to track that on various dashboards that are out there? And because to me, that's the end of this alt season is when those MNAVs go below 1.
Handling large digital asset trades requires precision. Kraken OTC gives high net worth individuals and institutions access to deep liquidity and competitive execution for crypto orders over $50,000 with minimal market impact and around-the-clock support. Trade via chat or RFQ at kraken.com/blockworks. Shout out to today's sponsor, Katana. Katana is a DeFi-first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
I'll put a feeler out there. If there's anyone that is tracking these ETH treasuries, let me know. Do you know of any that exist?
Well, there is our friends over at Blockworks Research have published a dashboard with an MNAV chart. I can share it.
Do they have ETH or is it just Bitcoin?
They got ETH and BTC. So let me share screen. Window, treasury companies, share. Okay. You see that?
Yes.
So let me maximize it. I don't have these.
Can you get out of this longer time frame and just show the last month?
Yeah.
Because there's a huge spike and I want to get rid of that. What I want to see is what is the trend looking? Trends looking bad.
Yeah, trend looks bad. So all of these SBET, BMNR, which we may be toward the end game of that, according to the narrative on Twitter.
Again, BMNR just pumped a little bit. So
yeah, I mean, basically the magic number is 1 here. That's the difference between a premium and a discount. And it looks like the green one, BTCS, was at a discount for a while, but the purple one, SBET, just crossed over the threshold into discount. I think the whole market is exposed to the Bitcoin DApp treasury companies, but like the alt season is exposed to this. This is the chart that kind of leads it all. And once we see these things start to trade at a discount, which they kind of are.
No, I mean, they're not trading at a discount.
A couple of them are, right? What does it mean when this green one is trading at 0.87? It's a discount? Am I reading it wrong? It's like it's not even trading at NAV. Let's do this is enterprise value. Let's do market cap to let's do market cap. Yeah, so none of them, well, the same chart actually. So
okay, look, market cap of SBET right now is 2.865 billion.
Yeah.
And the total amount of capital that they have is 3.3 billion of ETH.
Yeah, so this Blockworks Research is right. This is a straight up discount. And it was trading at a premium as recently as last week. So that just dropped. Let's get out of this one, and you can click on Bitcoin too, and there's a bunch of them here. You have to click on market cap to get all. Let's get past this crazy spike. It's not looking so hot. Even MSTR.
Yeah, that's actually a very good point. And how many people are talking about this right now? Let me look up SBET discount on Twitter. Either we're like horribly misunderstanding something. I don't think so.
No, I don't think we are. This is a discount. And then there's another one that you could look at called strategytracker.com that has other ones like MetaPlanet. You can see the trend. This is grotesque, right? Now, obviously, the trap you don't want to get caught in is, oh, look, it's been trending down from 12x NAV to 3x NAV during the middle of that crazy tariff like macro crisis, and then it all just bounces right back up with the market. This is different because this time the premium to NAV is leaking steadily lower every single week, despite the fact that we're in a bull market and there's no exogenous like crazy tariff crap driving things. So you're getting a really pure play look at the health of the treasury company ecosystem here, which now I guess that the bulls out there will say, well, Jonah, Avi, why does it matter if these things go to a discount? Unless they're forced to sell, the token prices should just keep going up.
It's because they can't buy more, or
Yes.
It's going to be very hard for them to raise capital to buy more when it's trading at a discount, unless the way they buy more is if they have warrants issued, like cash warrants issued, and ETH price goes up, and so equivalently their market cap goes up and hits the strike price, and then they get those warrants issued, but they're not going to be able to raise debt to do it.
Yeah.
So it's going to be a bit tough if that, obviously, like basically you're gonna see the buying stop. The buying clearly hasn't stopped yet. At least like SBET seems to be buying. BMNR hasn't, they stopped buying for a little bit. Their NAV is going down. From last reading from August 13th to August 15th, looks like their NAV came down a bit. Obviously, it's because ETH came down a bit, but also because they're not actively purchasing huge amounts of ETH right now. So it is a little bit of a worrying trend, and that's one of the reasons why I think, again, we get potentially a last gasp. I'm betting on that next push up from the people piling in that sort of missed the first one, and then it starts to unwind. And by unwind, I don't mean all of that $10 billion of Ethereum that is now in these companies is going to come out, because that's not really how that works. How it works is that they stop buying, and so all the people that were buying ahead of them, like basically front running these guys, also stop buying, and then who's left to buy? ETH. Despite what all of the people celebrating on Twitter, the like .ETH celebrating on Twitter, the only reason that people are buying ETH, which I will reiterate, is because of flows. Like, it's because of this structure. Like, without this structure, ETH BTC would be below 0.25, in my opinion. Like, it would be totally trashed, and it's heading there anyway. Sorry.
You mean you don't believe in the ETH is money now, ETH is the future, ETH is finance narrative? You think it's really just the treasury companies that are driving things?
Look, I missed the first trade, and everyone in the comments is going to go say that. Everybody's going to be angry at me.
I missed it too.
Because I missed it. But what happens is that ETH, like, we missed the technicals of it. And then we flipped. And yeah, we flipped late, but at least we caught a 25%. At least we caught a 25% move in that flip. And that's what you do as a trader. It's like you're not going to hit every single fucking trade. It's just not happening. You're not hitting every trade. You just try to figure out like where your edge is. And I clearly didn't have edge in the first 2x on ETH, but at least we had a little edge in the last 20, this last 25%. And I'm telling you, I do think I understand what's happening now. And people are not buying ETH because of any reason other than, hey, these treasury companies were able to raise money from Wall Street to buy ETH. Let's just run this. Let's run this trade. People are buying Bitcoin because they view Bitcoin as a genuinely useful geopolitical asset for the future. And they realize that you can make a lot of money with these treasury companies. And then somebody said, hey, guys, somebody called up all of the people that missed the Bitcoin treasury game, and they said, hey, we can probably run this back with number 2 ETH, It doesn't really matter that ETH sucks. What matters is that you missed out on the BTC treasury trade. Why don't you get it on this trade and make money? And that's what's happening. That's very much so what's happening. That just $10 billion of ETH that was bought by these companies. I'm going to assume at least 10 billion of front running. So that's 20 billion of buying. That's what sent ETH here.
Oh my God.
Right.
So,
that's why ETH is here, not.
I put out a little bit of a rage baity tweet to test that hypothesis. I said that these treasury companies have nothing to do with price action right now. This is all a deregulation trade. I don't actually believe that. I just kind of believe it. Like, I think that treasury companies are a symptom of the broader deregulation trade. But I do believe that they are driving price action. I was just kind of playing with words a little bit by saying that it's the deregulation that's driving the price action, not the DATs, even though deregulation is manifesting itself as DATs being possible, and then DATs are buying, and that obviously impacts price action. So I was kind of playing with words. People vehemently disagreed with me, including friend of the pod, Fijo. It's true. So let's assume you're right. Let's assume you're right that this is really what's driving the price of ETH up, and to some extent Bitcoin, but let's mostly focus on ETH. Then you also said something else, which I kind of disagree with, which is that even if the premiums turn into big discounts and this treasury phenomenon collapses in price space, that it won't really impact ETH that much. That I kind of, respectfully want to challenge. And so here we go. Let me challenge you. So you throw out the number 20 billion, right? That steady inflow of, $20 billion over the course of basically the last month and a half, right? That's offset clearly a lot of selling. And it's maybe even fostered some more buying too, but let's just say it hasn't. Let's just say it's just 20 billion worth of inflows, 10 of which are from the treasury companies. Now let's say that the investor base who's willing to buy ETH DATs at a premium to NAV has been tapped out. Okay, so they're not buying anymore. I think before the price of, let's say the buying just stops, the ETH buying just stops because these treasury companies aren't raising fresh investor capital at ridiculous valuations to buy ETH. So then maybe that's what we're starting to see now. The price levels off around $4,000 a token, but the price of the DATs starts to go down. So while I agree that in the short run, the price of ETH can't crash if the treasury companies just go from buying lots to not buying any, I do think that the price of the treasury companies, their stock prices, can crash very quickly. Because let's say you're holding Metaplanet, you're holding, let's leave MicroStrategy out of it. Let's say you're holding one of these ETH DATs. Do you really want to stand in front of the bus while ETH is going sideways and the MNAV just keeps trickling lower, like the premium to NAV? Like, no, you're going to get out. These are people at pod shops like Citadel and Millennium who can't buy ETH or the ETH ETF. They're just buying DATs instead because they're equity traders and it's been a good trade. They're not loyal people. They're just going to get out as soon to avoid the bus. All the retail traders are going to get out too. I bet, it's not going to be like Lehman Brothers, which went straight to zero and went bankrupt. Like, I doubt that these companies are going to have solvency problems, but I could see the discounts going as deep as Grayscale did, as GBTC did, which I think went down all the way to 55 or 60% below spot.
Yeah,
so,
it was like 50. Man, that was such a great trade. At some point, these are also going to be a fucking screaming buy.
Yeah, that's what I'm thinking.
100% going to be a screaming buy. But let's actually.
The DAT trade, just to finish the thought very quickly, and then I want to hear your take. The DAT trade is not to short these things or short them versus ETH. The trade is to wait until they suddenly just cascade down to distress levels and then rerun the GBTC playbook all over again. It might happen at a 40% discount this time because people have seen it already. Anyway, sorry, go ahead.
I agree with you. I think that's kind of like, guys, just to reiterate, that's kind of our job here. Our job is to not come in and give you guys like a trade of the week, like buy this meme coin, sell it plus 20%. It's to try to set you up for these kind of home run trades that maybe don't really, I mean, they happen once a year, maybe a few times a year. you kind of see that you maybe see them coming, but unless you're prepared, you can't take advantage. That's going to be a home run trade. At some point, these treasury companies, they're going to get forced liquidations on them, and they're going to just, people that really just need to get out. Maybe they overlever themselves. Maybe, I don't know if this is true. I have no freaking idea if this is real. But what if there's an entity out there that has looped this, that has bought like a bunch of MicroStrategy and then borrowed against MicroStrategy to go buy another Bitcoin treasury, and then borrowed a bunch against everything to go buy an ETH treasury, and then it all like liquidates itself. Like, I'm not saying that's happening, but like, it's not improbable that there's some weirdness going on in this market, and that's where all these people are getting the money from. Some of it I assume is borrowed money. Some of it I assume is real money. Some of these companies I assume are good, but it is, it's going to be a very, very, very good trade to buy at some point. Anyway,
Yeah.
maybe I'd probably scale in from 30 to 40% discount. Like, just, I also think that,
Just a better way to hold ETH or Bitcoin.
correct, it's better way to hold Ether Bitcoin. Like, even at like 20% discount, like I'd have to look at the structure of some of these companies. But for example, if Nakamoto went minus 20%, I'd probably buy it there. If Metaplanet went negative 25, 30, 20%, I'd probably buy it there. Like, those two, I think, are structured okay.
So the structured okay is so critical, and I'll tell you why. Now I get to pull out my old dad analogy from Lehman Brothers. So back at Lehman, when it went bankrupt, we, the teams that survived and got acquired by Barclays, we used to talk about, especially us on the credit side, which is where I sat at the time, we created this, or maybe we didn't create it, but we used this saying, which is, you don't go bankrupt because you're insolvent. You go bankrupt because you're illiquid. Now, what does that mean? That means that if you're insolvent, that means, kind of in the sense of the expression, it means that your liabilities are greater than your assets, right? Like, you just owe more than you have. But you can be fine in that scenario for decades. Just look at the United States of America, right?
Mm-hmm.
Maybe that's a bad example. Like, basically, if you can service your interest payments on your debt, you're good. You're not gonna go bankrupt.
Mm-hmm.
But you go bankrupt if you're illiquid, meaning like a bill hits your mailbox, right, that you can't pay because it'll take you 100 days to sell some asset or unwind some structure in order to get the money to pay that bill, which is due in 50 days, right? So that's when you go bankrupt. So you really have to assess whether these treasury companies are insolvent, illiquid, or neither. And the beauty of GBTC was that there were a couple of beauties of that trade. The first was that the price of Bitcoin was low. So you could just feel confident that the whole market was probably going to appreciate over the long run. The second thing was that not only were they were neither illiquid nor insolvent. Like, GBTC's bills were probably, a few employee salaries and fighting off legal boogeymen. And they could easily service that with the 2% fee they charged on all the Bitcoin they held in their trust. So they could just sell that Bitcoin, pay all their bills. Like, in illiquidity, zero. Like, insolvency, not a problem. With these treasury companies, right? Like, some of them, especially the ones trading at a steep discount to NAV that rely on equity financing, they may very well be insolvent. And while they're not illiquid in the short run, they probably have enough money to cover their bills for now. They might become insolvent and illiquid like pretty quickly. And so you can't just bottom drawer this the way you did with GBTC and look the other way and live your life and then check your portfolio in 2 years and feel smart. Mm-hmm. This is like, if you pick the wrong one, you could be totally right about the trade, getting ETH at an amazing discount, and you just pick the wrong horse and it like dies underneath your feet. And you're just like, the rest of the race is going on and you're just sitting there like underneath a dead horse. So
yeah, no, I'm with you. It's very, very important to pick the right one for every single thing that you just outlined there. And maybe next time on the pod, what we'll do this will do a little prep for you guys because the more that I think about it, the more excited I get about this particular trade. It's
Yeah.
like I can't wait to do it. So
These are tasty trades.
let's come back and we'll let you guys know what we think the best structured ones are on the next podcast, so that we can all get on this trade together.
MicroStrategy is the most obvious one because it's so battle tested, right?
Right, but MicroStrategy might not actually trade at a discount.
I mean, put it this way: if it does, that's a screaming trade, right there.
Sure, for sure. If it does,
how much is Saylor up, by the way, on his Bitcoin? What's his like up P&L?
I don't want to misstate this. I think it's 27 billion. That's insane.
Holy shnikes.
27 billion.
What's his strike price? What's his average fill?
Freaking insane. And he only has he only has 8.21 billion of total convertible debt with an annual interest payment of 35 million.
Move over, Warren Buffett.
That's freaking amazing. Like that's so good. Like he's done so incredibly well. Wow, I'm honestly in awe.
Me too.
Like I'm in complete awe that he's managed to pull this off. Well done, Saylor. Well,
hats off to you, big man.
Yeah, seriously. No, this is going to be good. Another one that like I want to go back to what I was saying before. I don't think we're done yet. I don't think we're at the end. I think we get another leg up, and I think if you're not buying here, you're probably making a mistake. Like I'm definitely buying here. I shoving it a little bit more on this pullback, looking for the next rally. But it is also true that when ETH rallies and when the altcoins rally, we're close to the general global end, not just the alt end.
Yeah.
So like, it's very possible that I kind of was of the opinion that we would get a slow summer, and that's been true from the Bitcoin standpoint. Obviously not true from the ETH standpoint. Had quite a busy August, but from the Bitcoin standpoint, slow summer and then pick up September, October. I think it's possible that what we do is over the next 3 to 4 weeks get a nice rally everywhere. Bitcoin doesn't get above 120 for an extended period of time. We wash out after that boom to like a 98 to 102, which would feel like absolute death for people. And then we go sideways for a bit and then we go up. That's kind of if I were to like take a crazy take out, that would be my crazy take. Is you probably hit like 100K again, go sideways for a bit.
Maybe there's a way to like bet on that with a series of parlays, and then it's just.
But I think good, really happy, really good for the next 3 weeks, then really bad for a little bit, and then really good again.
Yeah, that makes sense.
That's my path for you.
You know what?
As a trader, like I would, if you're buying these levels, because people always say, "Oh man, you guys told us all you said Aave, but then it retraced." Like, let me just reiterate: if you're buying here, you're selling plus 15, you're selling plus 30, and you're selling plus 50, and then you're out.
You know who you kind of are echoing here, or maybe he's echoing you. A friend of the pod, Roshan Patel, very smart guy, great trader. He put something out this morning that I really liked. He said, for what it's worth, the one thought I felt compelled enough to physically write down from the journal was ETH pumps hardest last. He says, well, I don't think we've necessarily topped cyclically. We're pretty darn close, and taking less overall risk moving forward makes way more sense, which makes me feel stupid for fiddling around with margin at these levels. Mm-hmm. If we have another leg, it's often the most parabolic. Now that part makes me feel smart for fiddling around with leverage at these stages, because usually when you're in the 8th inning time-wise, you're in like the 3rd inning price-wise. So you can get away with playing with a smaller capital base. But then he talks about DATs being all the momentum. He said, a huge part of this willingness to flip and cut, and this is the critical part of the tweet, is that the TradFi buyers of crypto here have way lower return thresholds to feel good. Put it this way, they buy something, it nearly triples, then it drops 20 to 30%. They don't care if it could double from there. The return was objectively good enough, time to move on. These aren't delusional moon boys. None of them are holding this stuff for the absurd price targets on CNBC. They are not believers. And I think that's critical, right? Like, we have to just step back, and in comparing this to previous cycles, this is like the beating heart of crypto is no longer the online retail degen who's going to feel bad about selling a 3-bagger because somebody else held it for 10x or 100x. We're dealing with like people with bigger, deeper pockets, bigger treasuries, and lower return thresholds. And so it kind of makes me scared.
Or in other words, we're dealing with freaking weaklings. But yeah, dealing with paper-handed losers. And if any of you just got into crypto in the last few years and you're looking for 20% on your money, you're a fucking loser. At least look for 30. Anyway,
the institutional, just for context, in all seriousness, the institutional asset, like registered investment advisors, when it comes to retirement, they'll cite the 3% rule or the 4% rule, which is your portfolio has to generate 3% after tax per year in order for you to retire. And you should spend 3% of your net worth every year. And this excludes real estate. It's like, which means, I think in order for most people to accumulate that much money that they can basically service their entire life's worth of spending at only 3% of their portfolio per year, like, you've either got to sell your tech company, be an early employee at somebody else's tech company that becomes a unicorn, or you need to be like an astoundingly successful finance person if you want to hit escape velocity in your 30s or 40s. And crypto,
that's why,
that's why we're here.
That's why we're here. That's why we're here for you, our friends. We'll be here for you next week as well with some feedback on those treasury companies. But don't forget, we're in your corner.
Yeah. Anything else? We good?
I think we're good, man. That was great. It's good talking to you as always.
Yeah, likewise. I feel like feel both smarter and stupider somehow.
I definitely feel stupider solely because I borrowed USDC instead of you. Why did
I feel stupider because I admitted my brain glitch, snow crash when it comes to leverage, but smarter because I learned from you about the market.
Smarter because you said, aren't the borrow rates like 2.5%? I was like, it's 6.5%. Wait. Anyway.
Good times, man. I'll see you next week.
All right. Adios.
Nothing said on the 1000X podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.